Yeah, okay. Good morning, everyone. Thanks for tuning in for this month. We are already reaching end of the month already. Is 25th of April today. And in the May, we will see an exciting month in May because the energy could be one of the most imbalanced month of the year. Okay, I will tell you why later on. Let's look at the energy first, and then you also can see for yourself that why I say that this is one of the most unbalanced month. So whenever you have unbalanced month, things will be very volatile, especially with the fire that is so strong. That's why I deem May as a financial system in a flux. That means it's volatile, it's ever changing. Like flux, it's like volatile and ever changing. If you learn electromagnetic, so it's also is in this form now. The agenda for today, as usual, we will do an introduction, a disclaimer, and then a recap of last month, and then the influence of the 5 elements energy in May 2023, and the geopolitical and financial forecast global May 2023 done by PC through his research, and we will summarize out what to expect in May. Okay, so a disclaimer here, as usual, the content is purely based on our study in global trend related to 5 elements energy in Chinese astrology and also global research for you to use as a guideline in your investment decision or even in your trading decision, because I know there's a lot of traders also in our group, in our member. So exercise caution in investment, in trading, especially in such volatile situation. As just now, BC says that for those traders, this month, you really have to be on your feet and do your own research on the company that you want to invest in. We will not give any stock advice because we are not financial advisor. A brief recap on April, what happened. So in April, the fire starts to come up, means that there is some financial things going on, and fire also represents technology and information. And we have also seen explosive of AI, that's technology, from this year onwards, ever since the introduction of AI platforms by Open AI, by Google, but we are not allowed to use that in Malaysia. I do not know in Singapore you are allowed to use BAT or not. Then another one by Bing, introduced by Microsoft. So this AI is definitely here, and this is the starting, and it will change the way we work and we interact with AI as well. Okay, and also
I think Evelyn, I want to add, right now the AI is you can say it's still at an infancy stage, because recent reports have surfaced that when people use the AI, they ask questions and such, the AI is biased, very biased towards whatever narratives that there are in the internet. So they actually skim through all the writings and all those based on literatures that people have written. For example, reports have come out that the AI says that human beings are very pests, they are like pests, and say that even an AI argued with an analyst that he sees the end of human beings. So these are because they skim through all these kind of narratives and literature, so AI can be very dangerous as well. So that is why there's a lot of caution about how AI is to be regulated. I think the next thing we see is regulations against how AI is to be used, because it can actually create create unrest in society and so forth. Yeah, back to you,
Yeah.
Evelyn.
Yes, definitely. Because AI is just very simple. They are, they have the intelligence to withdraw database what was written in the past, because right now internet has already matured, and there's a lot, tons and tons of information in AI. So where the
Yeah, Evelyn sort of lost you.
oh, really?
Yeah,
Can you still hear me now?
yeah, can.
Okay, because my internet connection is unstable. I just want to give you a message. I'm saying that, AI is nothing surprising, because AI, where does AI got information? Got information from the internet, because the internet technology is very mature now. There are tons and tons of information there, and they curate the information from there. So if the information is biased, definitely whatever that is curated out is biased also. Same thing.
Yeah, if the AI, get its info from Hollywood movies, then we are doomed.
Every day our life will be drama, like Hollywood movies, same one. Okay, yeah. Okay, so yeah. So in terms of April, the fire is very strong. The financial system is quite chaotic. We already says that, and it also shows that also there are like banks also, it does not rest here. I think the banking industry is under attack, and then the same metal. This is something very interesting. I hope somebody has taken the opportunity also, that the precious metal gains attention. I think the price starts to go up, right, in April. And it's not the peak yet. We shall see on May 3rd what will happen, because May 3rd is a very strong energy of combo with the same metal. Then we shall see, what happened in this one. And then government and authority is also trying to regulate, but still is quite, it is quite chaotic, because at least we can see some officer here, because Earth is officer of the year. And opening the truth discussion between government, then we see that the government, when you have two mouths here, that means there is discussion going on. You can see all those people from European countries, they start going to China, right, to have discussion with Chinese government. Yeah. And also gold prices starts to come up. And then the financial sector, inflation is still high, is in turmoil. Although it has sort of come down a little bit after the incident in March. However, in the background, still there's a lot of things going on. And also, I think we see the dollarization effort is everywhere, where everyone prefer to trade in their own currency now. And besides that, I also would like to bring back you guys to, I think all of you have bought our books, has read our books. If those that have not buy our books, I think you can do so. We will provide a link. It's not too late yet, because now it's just April. There's still more to come till the end of the year. And we have already forecasted the de-dollarization in one of the chapters 11, on global changes coming, by BC Wong. So right now we can see that is happening in front of us. PC, you would like to add a little bit of perspective on this one?
I think we are reaching a situation where earlier I shared with Evelyn, that there's a quote by some philosopher that there are decades when weeks happen, but we are right now in a period where weeks in which decades happen. So a lot of things are moving at a very fast speed. I see it as a competition between the US and China on who to win the war, be it economic, technical, or military, to see which one would actually force the other one to back down first. Of course, US is eagerly wanting to involve China in a military conflict in Taiwan, because that would give reasons for US to launch sanctions together with European allies against China, and possibly seizing what is estimated to be a $50 trillion in of Chinese assets globally. China, on the other hand, is working with Russia and other like-minded nations to de-dollarize, so that it becomes very expensive for the US to finance a war, and also bring the US economy to its knees, so that it will back down against further military conflict. So these are the kind of things that we are going to see moving forward. And especially next year, I think would be a deciding factor, because US would be going into an elections, and so is Taiwan. Yeah. So we'll talk more about that as we move on, in the months ahead. Back to you, Evelyn.
Okay, yeah, sure. It will be interesting to study Xi Jinping's birth chart. Maybe I will do a YouTube video on this. Is he really a strategist or not? Because all this requires strategy. So let's look at month 2023's energy. The month 2023's energy, you can see fire at its peak. If you recall the spring chart, the year chart for 2023, the Li Chun chart, or the arrival of spring chart, we already have fire, right? And right now, the month comes in, even more fire. So you can imagine, and fire this year, because this is a day here, is water. So water controls fire. Whatever you control is actually your wealth related. In other words, this is the people, the global people here. Every human being on earth this year is represented by water, and here is fire. So whatever you control is wealth. Wealth also represents financial system in our money or wealth in the chart, okay, for this year. And that means that when you have wealth that's too strong, means that it is out of balance. People cannot control. That means you cannot manage the money well, and you will have a lot of money problem. So this all starts to come in. We start to see great layoff. These are all domino effects. It's chain effect. Like, people start to be laid off. Once you lay off, that means, money will have a problem. And then you start to withdraw from your savings, maybe from the deposits that you have from the bank. And this also impacts the financial system. So all this comes in, one chain effect to another chain effect. That's why everything will...
Yeah, Evelyn, I want to add, that just this morning, the First Republic Bank published their financial data. They are going to lay off 25% of their staff. Now we can see in the months before that the tech sector has been laying off people from Facebook, from
Dell,
from Amazon. But when the banks start laying off people, it goes to show that all is not well, okay, because they are the pillars of the economy. So even when the banks start laying off, it really shows that something is not good at all. Yeah, back to you, Evelyn.
Yeah, okay. So the financial system will continue to have reset, to have attention, and inflation will surge to a new high, because I think the weather will be quite dry, will be hot with very little or no rain. Okay, so you will experience, I think you have experienced the hot spells in April. So it will still continue in May, okay, in this summer, where the fire will be quite strong.
Yeah, incidentally, a number of analysts are already predicting there will be shortage of food, because they also check against the production as well as the forecast by industrialists in the agriculture sector. And some analysts are saying that we should be more aware of the agriculture problem, which can arise due to combination of bad weather, restrictive in exports and such. So and if we look at it, yeah, sugar is already up about 20%, I think, since the beginning of this year. So sugar is also one of the denominators of how the agriculture sector is. Okay, back to you, Evelyn.
Okay, so if you remember that we have talked about what Mother Oracle says in the beginning of this year, that the weather will be extreme. It has a quote, one verse that states about the weather. So it's really a concern. So let's look at in the month of May hexagram also. Is called small livestock. Actually, this is like a wind here. And then this is heaven. So heaven represents the sky. And then the wind here blowing the clouds. So it's wind of uncertainty. Everything will be like, a flux, a floating in the sky. And also, if personally you look at the, if you get this hexagram on your own, personally, it means that it's difficult to accumulate wealth. That means people generally, general public, there will be some exceptional case, of course, because there's no absolute. We already know that in this world there's no absolute, because if you look at the tile itself, in the white there is a black there's a white, so nothing is absolute. So definitely there will be people that can accumulate wealth still, but it's just that generally maybe 80% of people will have problem in accumulating wealth. And also partly I think it's also due to the great layoff as well. And I would like to warn that this month, especially because the fire energy is so hot, it's so intense. Everyone that you deal with, they will also have, intensity of being angry, being impatient. This is just the personal relationship with people around you. If you have colleagues, you have co-worker and all this. So you have to keep your cool, because you know the energy. Yes, a lot of people are not aware. So suddenly people become, very short-tempered, very this one. And also, in the road, sometimes you can see road bullies and all these things. I just met one yesterday. So that's why I wanted to warn that on the personal basis, you yourself have to keep your patience, your cool as well. Okay. So yeah, we will go back to PC. I think your turn to share. Shall I stop sharing?
Yes.
Okay.
Yes. I think Evelyn has touched on quite a number of things, but let's go back in April, what were the misses and where we got right. So of course we forecast that US and Europe banking crisis could worsen, but the risk seems to have abated as central banks move in unison to calm investors. So there were a lot of narrative driven by the central banks to calm the situation, and then we saw the stock market moving back up again. But the risk still persists, but attention has been drawn to other areas such as domestic politics and geopolitical concerns. But as I shared with you just now, First Republic Bank has announced their results. They are going to lay off 25% of the people. They saw a drop of deposit. I think, I can't recall, I think it was 37 or 40%, something like that. So deposits have actually been withdrawn. So EU, we predicted that EU could see inflation rising, but apparently the EU inflation fell to 6.9% in March from 8.5% in February. But UK inflation remained high at 10.1% in March, down slightly from 10.4% in February. So UK is still in the doldrums, but Europe has seen lower inflation because energy prices fell for the month of March, and in April it still remains low. But I think with the OPEC cut starting to eat in to the energy supply in beginning of May, then I think we will see inflation rising again in the month of May. So where we got right?
Yeah.
Yeah.
PC, actually, we also forecast that, remember, we forecast the stock market will be quite optimistic in the April. So I think it was doing quite well also in the April.
Sure.
Yeah.
So the CRE, or the commercial real estate crisis in the US, is starting to worsen. And here there's a chart that shows that office space vacancies in the US have risen to a new record high. So, and more likely to rise higher in the coming years. In fact, there's a analyst from one real estate company. They predicted that vacancies can increase by another 55% from here. So probably we'll see vacancies reaching on the average in US about 20%, which will be another record high. So some of the recent sales of US real estate, you can see that how bad it is. Like Ocean West sells Taft building for 28 million, equating to a 70% loss, okay, compared to their purchase price. Then Blackstone sold 2 Griffin Towers at a 36% discount. And sales of rental apartment buildings in Q1 fell 74% year on year, which is the worst fall since 2009. So you can see that, in the commercial real estate. Sorry?
Oh, I think somebody is, Augustine is not on mute. Let me mute him now. Yeah. Okay.
So I think the commercial real estate is facing a lot of challenges, and I think it's going to get worse because of the work from home kind of thing. There is a 50-50 kind of split. So that means that a lot of the leases that will expire in this year will not be renewed. So probably we'll see a lot of office space being vacant in the coming quarters. So where we got right, again, US bank deposit decreased by another 76.2 billion in the week ending 12th of April, and shows that the banking crisis could blow up again if deposits continue to decrease at an alarming rate. US stock market staged a brief rally in the month of April. It's more like a relief rally because overall the downtrend of the bear market has not ended. So the Dow gained 2.2% and the S&P 0.61%. And gold and silver rose, gaining 2.26% and 3.94% respectively. Gold outperformed the S&P as predicted. Now the thing is that gold saw a lot of heavy selling throughout the whole of last week, mainly because on Tuesday, today is the expiry of the options. So the bullion banks are forcing a lot of long positions to go out of the money. So that's why they short sell gold massively, so that it trigger all the stops, okay? And the long positions have to liquidate. So this is what the bullion banks have been doing all through the year, all through the decades. In fact, since the COMEX has been founded during the 1980s, I think. So it has been used to suppress the price of precious metals, mainly because if the price of precious metals rise, then that would signal a weakness in the US dollar. So the whole objective is to promote the US dollar and suppress the price of precious metals. But with the global dynamics shifting after the financial crisis in 2008, the BIS have introduced certain regulations, and effective from 2022, gold has become a tier 1 asset. Now, previously, gold is treated as a commodity, which is a tier 3 asset. But with the new rules introduced by the BIS, gold has become a tier 1 asset. It's good as cash. So I think part of the reason is that the Bank of International Settlement, the BIS, is already aware of the risk in the entire banking system. And that is why they need to use gold eventually to overcome the huge debt that the global banking system has in its system. So if we were to look at global debt at more than 300 trillion, the world economy will not generate enough growth to pay off that debt. So that is why you see a lot of central banks buying gold and giving gold a strong floor, okay, to continue moving higher. So now after gold fell back below 2000, today gold is back above 2000 already. So France political turmoil worsens as protesters have stormed the LVMH HQ, BlackRock office, and the Euronext exchange. So the French people are not letting Macron off the hook. So China housing market saw recovery as predicted. China GDP gained 4.5% higher than expected. A lot of people were forecasting that it is going to be around 4%. So we expected GDP to do well, in our March session because electric consumption pointed to an increase in economic activities. So China continued to reduce its US Treasury holdings as expected, and de-dollarization has gained momentum, okay, and there's an increase in US-China tension. So if we look at it, let's look at some of the things that show why we will see a recession. Now, this is a chart showing the estimate of the S&P earnings. So you can see that has fallen quite a lot, in the estimate since the peak here in June 2022. So strong US dollar affects multinationals' earnings. Yeah, higher financing costs affect companies' expansion plans, and inflation increases the cost of doing business, like the rising cost of raw materials, rising cost of wages. So although recent US dollar weakness has improved multinationals' earnings, but damage already done as emerging market economies are reeling from the effect of strong dollar and high borrowing costs. So even if we see US dollar weakening in the coming months, but the damage is already done for most of last year and the up to now in 2023, and a lot of emerging economies are struggling. So even though a weaker dollar will benefit them, but it will take a long time for them to recover back, from the damage that the strong US dollar has done to their economies. So even de-dollarization is an attempt to move away from the US dollar so that they insulate their economy from the volatility of the US dollar. But it will take time for emerging market economies to be on a stable platform for them to become stronger. Emerging economies, of course, besides what we see in ASEAN, I think most of the damage have been done in Africa and in some parts of the Middle East, as well as in Latin American countries. For example, Argentina, has just ran out of US dollar. Egypt is on the verge of collapsing. Then Tunisia, is so heavily indebted, but right now, okay, it is not going to apply for any IMF loan. Okay, rather it is voicing its intention to join BRICS. Now, a lot of people talk about BRICS, especially China debt trap and all those are actually narrative driven. Like the collapse of Sri Lanka, China's total debt is actually about just 11%. of Sri Lanka's total debt. 70% is actually from the likes of BlackRock, IMF, and World Bank. Okay, so the main debt trap is actually from the IMF, and that's why, you know, Tunisia do not want to apply loan from the IMF, because the IMF, when you borrow money from the IMF, it comes with a lot of stipulations. For example, you must allow for the privatization of the nation's assets. Okay, must allow the Western companies to abstract your resources, you know, at very low cost. So that is the true debt trap. But because of the tension between the West and China, it is much easier when you control, you know, more than 90% of the global mass media to actually paint a picture of such. So if you really want to look at there's actually a report done, I think by Asia Monitor or something like that, that shows in Sri Lanka, what was the main reason for it falling, you know, seeing its economic collapse. You can actually Google it. I can't recall whether it's called Asia Monitor, but there's an article written precisely on that. Yeah. So another sign of impending recession. Now, this is a chart by Charlie Bilello, okay, which shows that how recession has always happened when the Philly Fed Manufacturing Index dipped to this level. So right now we are at this level, which coincides with the 1970 recession. So, and if it continues lower, it goes to show that the recession is going to be much deeper. Okay, so this is how the Philly Fed Manufacturing Index is already showing that recession is already in the system. And the other one, okay, this is the chart by Macro Elf, which shows the recession has always happened when leading indicator index for dip below. Okay, sorry, some typo here. Dip below zero. Okay, so and you can see that over here, hold on, I need to expand the slide. So you can see that right now we are already here, okay, and we are already here, and all these dips have already been shown to match with the recession. It is a 100% hit rate. So in other words, Macro Elf is saying that, you know, it's unavoidable that we will have a recession moving forward, because this is a very important indicator. And because there is an average of 7.8 months after the first negative print, where the first negative print was in August 2022, and using the average of 7.8 months, ELF is already saying that recession could hit in Q2 of 23. So this is another chart, yeah. And what is more important is that how things could actually become worse. Now, this chart by Nick Gurley shows that the M2 money supply has reached a level never before seen since the Great Depression. We are here now, and this was the Great Depression. Prior to that, even during the global financial crisis, you know, it was around here, okay, at positive 2%. Right now, we are at negative 2%. So that means that things can turn for the worse, and we might not have a recession, but a very deep recession, or something that borders towards the Great Depression, if we base on just the money supply growth. Then how households are actually facing a nightmare. And this is another excellent chart by Nick Gurley showing that climbing debt to income ratio, okay, will push US household to the brink, just as how household debt reached a new record high. So over here, you can see that the ratio was during the global financial crisis was just 41.2%. Right now it's at 43.5%. And the household right now, okay, is facing a lot of pressure. And the Clever Real Estate Survey reports that 39% of Americans have skipped meals to afford their housing payments, with the figure rising to 44% among millennials. So instead of 3 healthy meals per day, it's just like 2 meals a day just to pay the housing loan. And on top of that, US household debt has actually reached a new record high, where a lot of the debt are also in the revolving credit, which means credit card debt, okay? And credit card interest payment on that has risen from below 20% right now to more than 20%. And why I think, like Evelyn said, there's going to be layoff, okay? If we look at it, the unemployment situation could worsen for the US, okay? Because the NFIB index has fallen to the same level as the global financial crisis. Here you see that it's at the same level. So why is it important? Because the small businesses, okay, constitute the lion's share of US employment. If they are not expanding, jobs growth will decline. And meanwhile, the unemployment claims have reached a new 12-month high. So you can see unemployment claims are actually trending up. And with a lot of layoff being announced here in April, I think we will likely see things moving to a higher level in May, and the unemployment claims would start trending up again to a much higher level than the current. So I believe that if we have more people losing their jobs, just as they are cutting their meals to pay their mortgages, eventually the household will just fall, okay? They may have to force sell their properties, okay? Or they become a delinquent loan or delinquent borrowers, and then that would actually force a foreclosure. So things would start to unravel very fast. And moving back to the commercial real estate, I think some of you all have received the slide last month that shows that the commercial real estate sector is destined to have a lot of refinancing coming between 2023 to 2025. In fact, in the coming 2 years, this year and next, that's that's about 1.5 trillion that needs to be refinanced. And a lot of all these loans to be refinanced are actually previously based that they got the deferral from the authorities, okay, in settling their debt during after the financial crisis, and then they were actually able to continue refinancing it using low interest rates. But right now, interest rates are already moving up. So if, let's say, from zero bound, okay, to right now more than 5% eventually, you can see that it's going to be a burden to a lot of all these commercial real estate. And that is why earlier I showed you a lot of them, they are abandoning ship. They, even if they sell at, 30 or 70% loss, they just want to get out of it, okay, because they know that if they take on a 5% loan, just as vacancy, is going to fall by double digits, they will be in trouble. So what could happen in May? I believe that gold and silver will rise, continue to rise due to weaker USD arising from debt ceiling increase. Right now, there's still a debate, okay, but I think they will eventually allow the debt ceiling to increase, and then the budget and trade deficit will continue to be very wide and ongoing de-dollarization. So there'll be widespread risk in the financial system, and as we can see, bank deposits are still being withdrawn. So May will see a refocus back into the banking system. Then there's ongoing geopolitical risk. Okay, right now, we have Poland very interested to join together with Ukraine to fight Russia. The thing is, the things are just going bigger and bigger. Okay, then because of central banks buying, they need to prop up their financial system with gold, so that if everything fails, then the only solution would be to revalue gold at a much higher price. Okay, and some analysts have said that it could be five digits of gold per ounce. Eventually, if let's say they need to need to pay off a large portion of the global debt. But I came across a Society Generale article many years ago saying that the amount of debt to just pay off about 50% of the global debt was around I think $25,000 or $30,000 per ounce of gold. But that was a few years ago. Since then, debt have actually increased a lot. So that's why central banks are buying gold, because they are only, if the bond market collapse, bonds are actually assets for central banks. Right now, the Fed is sitting on a loss. Some people calculated, between few $100 billion to about $1 trillion because of the fall in the price of US treasuries and mortgage-backed securities that the Fed holds in its balance sheet. Okay, so if bonds value fall, the only asset of value that is devoid of any counterparty risk is gold. And if let's say everything else fails, then gold will be forced to be revalued higher, so that it helps it helps to bring the system back into being normal. But that's what most of analysts say. We just await with just the belief that gold actually helps to protect your wealth, and silver too. There's an old saying, that gold is the money of royalty, silver is the money of gentlemen, and then that is the money for slaves. Okay, so this is why a lot of people see the importance in owning physical gold and silver. For those that do not own physical, you can actually own it, open a savings account or invest in ETFs, but the best is still having physical. Yeah, so stock market will enter a volatile stage with some wild swings between gain and loss, as fear of recession and bullish bet on Fed's intervention fighting for dominance. So if the economy worsen, there will be a group of people who will say that there's no good news like bad news, and then they bet that the Fed will intervene, and therefore they become very bullish. And then there are others that say that because of so many trillions dollars of printed money in the system, to bring it all back down, you know, they are expecting a more than 50% drop in the S&P. So even though if the Fed wants to intervene, okay, the stock market will rise, but it will signal even higher inflation, and therefore commodities will actually outperform the overall stock market. So that is why commodities will start to rise due to weak USD, and also there'll be nationalization of resources among Latin American countries. We'll cover that towards the end, because news have come out that Latin Americans are going to form cartels of their own. Yeah, so the commercial real estate market will continue to weaken, raising doubts of stabilization in the financial system. More prominent bankruptcies will be announced, and recently we have Bed Bath and Beyond, which filed for bankruptcy. So more layoffs are coming. So if you look at Europe, yeah, Europe's CPI has abated while UK CPI remains lofty. So many of the citizens engaging in protests and demonstrations across the European continent will hamper its economy. Okay, and protests will shift to anti-war mode. Now, previously, protests were more focused on inflation and the cost of living. But seeing that the EU have committed so much funds to Ukraine at the detriment to their own economy, right now, there's a massive movement that is very anti-war. You know, we have protests that are in a number of European countries that are asking no NATO, okay, as their message, you know, to stop the war, okay. So EU could see dramatic slowdown led by its major economies. France, Germany, and UK will be in focus. France, especially because of continual months, you know, or weeks in demonstration, will actually impair its economy. And Germany, having done some silly mistakes, okay, like they shut down their nuclear power plant, which offer clean energy. In exchange, they are going to buy more coal, okay? So that's double standard to you, okay? Other countries need to go green, okay? But Germany is okay for us to shut down our nuclear power plants. So with that differentiation in consumption of energy, I think Germany will see high inflation. In fact, just after the shutdown of the nuclear power plant, Germany's main power utility company increased electricity rate by 45%. Okay, that's capitalism to you. So of course, UK is neither here nor there. Okay, there are so many changes of prime ministers, not getting things done. I think UK would actually be the so-called the black sheep, okay, of the European community. So EU retail sales and industrial production came in at negative 0.8% and 1.5% month-on-month in March. So the ZEW economic sentiment still in positive territory at 6.4 in April, but down from 10 in March. So UK retail sales and factory orders came in at negative 0.9% and negative 20%. So UK is really hurting very badly, okay? Composite PMI at 53.9 in April, an improvement of 52.2 in March. But overall, UK seems to be worse off compared to the EU. Now, the improvement in the PMI and the ZEW survey, you know, was actually driven by the fall in the price of energy, because this one was in the month of April. But as we all know, OPEC would start cutting their oil production in the month of May. And just as Germany reduced, has already shut down its nuclear plants, energy prices skyrocketed 45%. So that is why we are going to see inflation returning in May. Okay, so in the month of May, where Europe is concerned, there'll be more downside in major economic indicators. Okay, signs of sovereign debt crisis emerging. I think especially the peripheral country, I think the major risk will come from Italy. Okay, could see attention turning back to the banking system. ECB and BOE could turn dovish to calm the market again, but that will only show the conflict, okay, in needing to protect, to prevent inflation and to prevent the economy from collapsing. So there'll be more talks on the introduction of CBDC by the ECB. So Christine Lagarde, the ECB main person, already announced, that they are going to introduce CBDC. And I think Europe is taking it a step further in that they are going to tie the CBDC to consumption pattern, okay, which means that you as a consumer utilizing the CBDC would have what you consume tracked to trace your carbon footprint. So obviously, if you are allocated a certain quota of carbon credits, if your carbon footprint exceeded the quota, then probably you have to buy your carbon credits from an exchange so that they can make money from it, and you become burdened with an indirect tax. So this is what is going to be transpired. And China, on the other side, has seen quite an improvement, okay? Q1 2023 GDP growth was 4.5%, beating expectations of 4%. CPI rose just 0.7% year-on-year in March, down from 1% in February. So instead of having higher inflation, China is seeing lower inflation, and primarily because China is buying oil and gas at a discount from Russia, okay, and that gas from Russia is being converted to LNG and then sold at a premium to Europe. So that actually helped to subsidize the energy costs in China. So PPI, slid negative 2.5%. So when the PPI goes into negative, that's a good thing, okay, because it means the production prices are actually being reduced, which is down from negative 1.1% in February. So China export of goods rose 8.4% year-on-year to 5.65 trillion. China achieved trade surplus of 1.41 trillion in Q1 2023 in RMB terms. China retail sales in Q1 2023 rose 5.8% year-on-year to 11.49 trillion. China's industrial output, an important economic indicator, went up 3% year-on-year in Q1 2023. Foreign direct investment into Chinese mainland expanded 4.9% year-on-year to 408.45 billion renminbi in the first 3 months of 2023. So despite what everyone says about China, money continues to go into China. So China's employment level remains stable at 5.3%, down from 5.6% in the first 2 months of 2023. I think this is not employment, it's unemployment. So their unemployment rate is at 5.3%. So if we compare that to the US would say, hey, our unemployment rate is actually much lower, about 3.6, 3.7%. But for those who have followed me through Facebook or through the years, you will know that how that data is being manipulated to suit the narrative. Yeah. So China's electricity consumption, a key barometer of economic activity, rose 3.5% year-on-year in March to 694 billion kilowatt hours. So this is very much in line with the first 2 months of January and February. Power consumption remains stable. But what is important is what's happening to the Chinese real estate market. So in March, 64 out of 70 large and medium-sized cities saw a month-on-month increases in new home prices, up from 55 in February, according to the National Bureau of Statistics. Meanwhile, 57 cities witnessed higher resale home prices, up from 40 in February. So fixed asset investment went up 5.1% year-on-year to 10.73 trillion renminbi in Q1 2023. China's steel sector saw output expansion in Q1 2023 rising 6.1% to 262 million tons, according to China Iron and Steel Association. So if we want to equate consumption of steel to the needs of the economy, we can readily tie it back to the construction, okay, which means that construction in China is once again expanding. It could be into infrastructure as well as a gradual increase in the demand for housing, as well as expansion of commercial real estate in China, because China has come up with a policy that they will support the development of REITs in China, where the government would actually assist them in converting their existing revenue generating commercial real estate into REITs, so that they can secure the funding and then embark on adding new commercial real estates into the market to benefit the society overall. So these are signs that the real estate is recovering at a steady pace. But why I think that China economy will actually grow strongly in Q2, we just have to look at the Chinese transportation. Yeah, in the highway transport, China highway saw 978.65 million passenger trips in Q1 2023, up just 1% year-on-year. But what is important is that highway freight volume total 8.57 billion tons, up 5.2% year-on-year. Now, this is the factor that will drive the economy because it is related to freight, movement of goods, okay, movement of materials. So in March alone, the number of passenger trips climbed 361.27 million, surging 21.4% year-on-year, and freight volume rose 12% year-on-year to over 3.5 billion tons. So you can see that January and February is always a very different month because of the extended holidays. Normally it's about 40 days, covering between January and February for the Spring Festival. So you can see how strong March has actually rebounded. We are seeing double digit here. And that means that with all the holidays gone, the main holidays of the Spring Festival gone, we will see an upsurge in economic activities in Q2 going into Q3. But in Q4, things will likely taper down a bit because of the holidays in October, because of the founding day. They normally have the golden week there. So if we look at the port throughput, in January and March period, container throughput in China reached 69.73 million TEUs, or 20 equivalent units. 20 foot equivalent units. That means the container size, yeah, up 3.5% year-on-year. The cargo throughput rose 6.2% year-on-year to 3.85 billion tons, and the passenger throughput saw 71.8% year-on-year to 19.35 million trips. In March alone, the country saw its container throughput, cargo throughput, and passenger throughput rising 7.6%, 12.8%, and 118.9% respectively. So you can see that March again saw an upsurge versus the average of the total of the average of the 3 months. Okay. So waterway transport, China's waterway transport network handled 51.18 million passenger trips, okay, surging 93.3% year-on-year. Waterway freight volume increased 5.4% year-on-year to nearly 2.08 billion tons during the same period. March alone, waterway passenger trips and freight volume rose 179.1% and 12.6% respectively. And we have the urban passenger transport. China rail transit lines in urban areas reported 6.18 billion passenger trips in the first quarter, an increase of 24.7% year-on-year. Ferries handled 17.01 million passengers during the same period, up 79.9% from a year earlier. Now, in March alone, urban rail transit lines and ferries saw passenger trips increase 59.1% and 121% respectively. You can see that it is much higher than the average, okay, of the first 3 months. So the increase in tonnage across all modes of transport suggests a pickup in the manufacturing sector, while the increase in passenger trips heralds a pickup in domestic tourism sector, which will fuel growth in the services sector. Now, this could mean a robust GDP growth in Q2. Now, incidentally, countries in the West, okay, like and Australia, actually, they are lamenting why with China reopening, there were fewer tourists than before. And of course, all the anti-China hype actually helped to drive people to the domestic tourism sector rather than going overseas. But nevertheless, starting from May, China would actually add, I think, more than 1,000 flights a day across China for people to travel outbound, including also the shipment of air freight. So there'll be more than 1,000 flights being added per day. So this could only mean that Q2 and Q3 is going to see pretty strong growth. So if we look at the global geopolitics, the dollarization is gaining pace in the global south. And there's just too many of them to list in a slide. So just follow, either you follow me on Twitter, and for those who are already members, I will actually send out news and articles, okay, as and when I come across them. So Tunisia announced intention to join BRICS and news that Japan and Mexico may also do so. Now, this is just news circulating, but neither country have actually voiced their intention, although Mexico trade with BRICS have actually increased quite a lot. And Japan, I think yesterday there's news out that the Japanese Prime Minister and say that while they are looking at strengthening their defense, he still believes that at the end of the day, there is a need for diplomacy with China. So this is already showing that Japan is watching the development of the de-dollarization process very intently. And so far, it's just some news that have not been proven true yet, okay, just some analysts writing, giving their opinions and such, but it will be very interesting. I think if there's any candidate that will likely to join will be Mexico, okay. So central banks bought the most gold on record. You can see that this is the net purchase, and this is the one in February. And Singaporeans might already have known, and if not, you might be surprised that Singapore actually led in the month of February, you know, in terms of buying the most gold, followed by Turkey and China, okay, and then India comes fourth, okay. So why the reason for sudden purchase of gold, I already explained previously, is because there's every indication that the BRICS reserve currency will be backed by gold primarily before they might add certain commodities like oil or gas, you know, among others, perhaps copper even, yeah. So in other areas, US and EU continues to ramp up the China threat as EU's Joseph Borrell calls for the EU's Navy to patrol the Taiwan Straits. So, you know, it's even the EU wants to, they say that Taiwan is a strategic concern for Europe. So somehow Europe has expanded all the way across the Atlantic to the Pacific. So some fractures in EU with calls to break away from US influence on its politics from prominent politicians led by Macron. So China is investing micron technology and is considering to restrict sale of rare earth minerals and magnet sales to the US. China refused to hold any discussion with US officials as China Defense Minister pays a visit to Moscow. Now, the key takeaway is in this sentence. China and Russia to strengthen strategic communication between two militaries, strengthen multilateral coordination and cooperation, and make new contributions to safeguarding regional and global security and stability. Now, regional and global security means that the relationship is deeper than the kind of relationship you see in NATO, okay, means that they are intertwining their strategies. I think about 2 years ago or a year ago, I can't recall, China and Russia held a joint military exercise in China, where actually Russian military personnel were actually using Chinese equipment. So that is showing some deep trust, okay, in the relationship between the two militaries. Otherwise, they would not have allowed another party to use their own military equipment. So this is to allow familiarization and ease of cooperation. So another news is that China holdings of US Treasury dropped to 859 billion in January from 867 billion in December. And the surprise was Saudi Arabia, which saw its holdings of US Treasury drop to 111 billion in January from 119 billion in December. So you can see even Saudi Arabia seems to be de-dollarizing, okay? But whether it is a continual trend, and I think we need to monitor that. If let's say it continue to drop, then that means that Saudi Arabia is quickly reducing its exposure to risk in the US dollar as it seeks to trade with multiple countries using their local currencies. Now, the other thing is the nationalization of resources in Latin America. Now, very recently, Chile's President Gabriel Boric said on Thursday, 20th of April 2023, that he would nationalize the country's lithium industry in order to boost its economy and protect its environment. Chile is the world's second largest producer of lithium. Now, this followed through on the 20th of February 2023, Mexican President AMLO nationalized the country's lithium deposits, handing the responsibility for lithium reserves over to the Energy Ministry. Now, this is in line with the news that Latin American countries will band together to create a lithium cartel similar to OPEC. Now, I think Argentina is also another major producer of lithium, and I believe that Argentina would soon nationalize its lithium assets, mainly because it has run out of dollars. The economy has actually collapsed. Inflation, I think, is 180%, if I'm not wrong. So that's why I think Argentina might also want to do the same thing. Okay, so then you have an OPEC cartel that will control the lithium. And the big question is, what next after lithium? Could it be copper, where Chile is the top producer in the world, or silver, where Mexico is the top producer in the world? Now, if let's say both countries decide to expand the nationalization process, then we can see them controlling important minerals that are very vital to the green economy. Silver is one such mineral as well, because silver is used in solar panels. Okay, silver is also used in electric vehicles. So if let's say they decide to this OPEC, this cartel similar to OPEC that controls vital resources, then these countries might see them having a better say, because they have already seen how Russia, in enforcing the trade in rubles, have actually helped the economy recover at a much faster rate during the first few months after the Russia-Ukraine war. So I think Chile and Mexico or even Argentina might be considering something similar. Now, if let's say Argentina joins in, then I can rest assure you Peru will also join in. And Peru is one of the world's top 10 producer of copper and silver. And then you actually have a very strong cartel of Latin American, consisting of Latin American countries that will be able to control important minerals. And we'll just have to wait if whether they'll expand that to copper or silver. So however it is, now these events could drive inflationary pressure in broad sectors of the economy, especially copper, where it is the most widely used metal in the world. And the global supply of the global extraction of copper have actually been reducing because the copper extracted are of lower grades. And if let's say we add in with the cartel control of copper, then we can see copper rising quite spectacularly. And in fact, all signs points to there'll be a copper deficit by 2025. So that means that we have only 2 years to go before the price of copper could actually move much higher than current. Some analysts are predicting that by 2030, copper could be worth about $10. Now, for those who actually follow me on IFS, I think I've discussed some of the one particular section on copper, whereby a 10-cent increase in the price of copper could be an additional of tens of millions in terms of its revenue. Why? Because copper is often found with the with other minerals. It doesn't exist just by itself. In a lot of minerals, copper actually in a lot of deposits, copper exists with gold, silver, copper or coppers, silver, gold with cobalt and all those. So that is why, you know, when they process the whole tonnage, they get other minerals as well. And therefore, some of the byproducts are actually at very low, at zero cost, okay? Depending on whether they measure it in copper equivalent or silver equivalent or in gold equivalent. So that is how important copper is. You know, a 10-cent increase in the price could actually result in tens of millions in profit, simply because, you know, it's found at very huge per ton. If let's say per ton of rock, if let's say there's a 0.5% copper, then you can imagine how much copper is that in that per ton of rock. Okay, that will be in many kilograms. Yeah. So Evelyn, back to you. I think we can continue from here. Just let me know whether I need to go on the next slide or so.
Okay, yeah. So maybe I will stop. You can stop sharing and I will share my screen and I will do a summary of the going on.
Sure.
Yeah, okay. So let me just go back and share screen again. Yes. Okay. Yeah, this one. Share. Okay. Let's do a little bit of promotion. I think for those that are new to our platform, I see quite a number of new names. We have actually both PC and I has a YouTube channel where you can subscribe to. What we have presented today will be available only 2 weeks later. Our members will get the first-hand information after we have presented. Maybe after 1 or 2 days, it will be available to them. But for the general public, it will be available 2 weeks later in both PC and my channel. So PC's channel focuses more on global trends and also has other interesting channels, other interesting videos related to global trends. And my channel focus on Chinese astrology. Okay, so you can follow us on our Facebook. You can even follow us on our LinkedIn as well. Okay, let's go through the summary for May for what we have talked about. So in May, let me go to a full screen mode. Y'all can see my screen, right?
Yep.
Yeah, okay. So fire is at its peak in May. So it represents financial. So one of the things that it represents is financial. It also represents energy. It also represents technology. So most probably from what it looks like, I'm more concerned about the financial because we are supposed to control, the people are supposed to control the money, but however, the money is too strong. The wealth is too strong. Then, okay, attention. So there will also be attention in fire-related industries such as technology and energy. The hot weather is expected. That means it's bad for agriculture. I think this also in line with BC's research on the potential of food prices going up. And this will trigger even worse inflation and more layoff will be expected as well. Okay, BC, back to you. I think no need to change slide already.
Just leave it.
Yeah, just leave it. Then I saw some questions there. We will answer it.
Yeah. So of course, going back just now, I mentioned that there's more risk of recession occurring, and I think the chances of it is very high as some of the indicators have shown signs of 100% surety of recession happening. So I think the tech war will intensify. Okay, there'll be a lot of like just now I mentioned about China's investigation into Micron Tech. And also, I saw a very funny news this morning in that if Micron Tech is being banned, US actually warned South Korea not to fill in the gap. So this is how US see itself, that other countries are just vessels. They are not obliged to have their own sovereign rule over their own future. Okay, so it warned US against South Korea against supplying to China. So China is retaliating with critical rare earth minerals, which can affect a lot of the tech sector. So there'll be more geopolitical chess moves between US and EU against the global South and vice versa. In fact, just as Lula announced that it is trading with China in local currencies, the US media is launching a smear campaign against Lula. Okay, then there'll be nationalization of assets, which could intensify in Latin America, triggering inflation across broad sectors. Now, if let's say we have an increase in food inflation and also the oil production cut starting from May, then we are going to see overlapping of inflations on very important necessities. Yeah. So bankruptcies and poor economic conditions will trigger more layoffs. Okay, that's all I have. Maybe we answer some of the questions.
Yeah, okay. So I can see that the first question is from Augustine. He asked, this is more on Chinese astrology. He says that the Ding month in May will counter sin. In the first place, I would like to clarify that there's no sin to counter because there's no sin in the chart. Okay, and the energy does not draw in sin for the month of May. Okay, so in terms of banks collapse, okay, actually banks will be more of the fire energy. Okay, so banks is actually metal energy. I get what you mean. Bank is actually a metal energy because when the fire is too strong, definitely it will counter the metal industries.
Yeah, so I think that there is equal chance that banks will remain back into focus. As I mentioned just now, First Republic Bank, upon announcing, okay, saw its share price, falling, I think by 20%, if I'm not wrong. So definitely the banks will be back in focus because whatever the central banks did to help drive the narrative, it is failing. Okay, and I think month of May will see more of that.
Okay, so and then it's snake month and tiger and in year. Okay, this year is rabbit and not tiger. So okay, the harm relationship in this case when we read the global economy, I have not really read the harm relationship. Because harm to me, this is how I look at the chart, how I read it from the Chinese astrology perspective. If you talk about harm, harm to me is a more of emotional human level. For individual human, yes, maybe we will look into even individual human because of emotion. It's not related to change, so it will consider as secondary because the way I read charts is very simple. I only consider first year relationship. To me, harm lah, all this in the branch one. I also, do not want to read it further because it will even confuse the chart reading further. That's why a lot of people learn all this Chinese metaphysics. They got confused at the end of the day because there's too many relationships. You have to screen out on your own, and then you cannot have absolute 100%, as I said. So what you need to do is that you need to look at use your own judgment and look at how you read the charts in order to have the highest accuracy possible without complication of things. Okay.
Yeah.
Okay.
So
yeah. Next is
yeah,
John
next question. Yeah. So he asked, will steel demand in Malaysia surge if the China steel demand increase? I think we need to separate into two. First and foremost, China is the world's largest producer of steel and is exported. So unlikely China would actually import from Malaysia unless it is for specific types of steel. But I doubt that as well because China is like covering every sector of the steel industry. So in that sense, China, if let's say steel demand increase, it will benefit more the iron ores, mining companies. And where Malaysia's steel demand is concerned, I think perhaps it will be more locally driven. If let's say there's a growth in the real estate sector, or there'll be more government projects that is going to build up the infrastructure, then perhaps steel demand in Malaysia will surge. So how China affect Malaysia, I think is not going to be very strong, based on my belief that China is exporting every types of every type of steel product to the global economy. Hope that answers your question. So next question is David.
Okay, maybe I would like to add in a little bit of perspective from the Chinese astrology energy perspective on steel demand in this coming, maybe in these few years or in the period 9. Because period 9 is a 5-year period. It will really change the trajectory of the metal industries, and steel is actually in metal. This is also, another thing that needs to be considered. I would think that, the demand, I would doubt that, the demand will surge. This is what I personally, when I look at, the energy interaction. Okay. So yeah, next.
Yeah. So David is saying that is it a right time to look into buying tech stocks in Bursa market? I think right now, Bursa takes its hit from the global market, how it performs, and then Bursa would perform accordingly. And I think right now in a tech-driven war, the narrative is such that a lot of the tech gains for US stocks in the first quarter of this year is driven by a rush to sell to China before the start of the restriction. So that was why a lot of companies at the end of Q4 reported some stellar results. And because of that, you see shares like Nvidia, all those rising. And on top of that, they ride on the hype of the ChatGPT, okay, which suddenly became very hot, and then say, our chips are just right for that. But I think that with export to China being curbed, unless Malaysia companies have some tie-up with China, okay, and it's homegrown industry, nothing to do with US patents and such, which US can actually place restriction on Malaysian stock, Malaysian companies to sell to China. If let's say it's homegrown industry, everything is pretty local, then perhaps it can have some benefit to China. So whether the time is ripe or not, I think is not ripe. Just my personal opinion, mainly because the general market correction and the preparation for a recession have not been actually has not actually been built into the US market. If let's say recession becomes clearer, then I think the stock market is going to fall, and that could influence Malaysia stocks accordingly. I think right now it's better not to estimate when it happens, but look into manners to protect your wealth, like putting some into the precious metals, and also you can start picking some from the commodity sector. So I'm still very bullish on the commodity sector, simply because we are at the infancy stage. I think some months ago I shared with you a chart that goes to show the relationship of the commodities index versus the S&P index ratio, and it is like almost at the near bottom in history. Okay, where during its peak is closer to 4. But right now it's hovering around at 0.9. So that means that if the US dollar weakens, commodities will actually take off, and then the stocks or the ETFs that are into the commodities would actually be performing much better than the S&P. So if let's say you are in Bursa, you invest in Bursa, then you is good to look at some of the commodity stocks. Now, if you are looking at the oil and gas sector, then look at existing producers. Okay, I am not too favorable on some of the services currently, mainly because the due to the ESG imposition of limits on the provision of funds for exploration and such. So that is why those that provide services for deep sea drilling and will not perform as well now. And because oil price is going to spike, then I think that companies that provide those logistics in terms of transportation of oil, that could also do well. I'm not naming companies, but if you know which those companies are, then you will know what I mean. Okay. Then of course, due to the higher price of sugar, I think there's 1 or 2 companies in Malaysia that actually have sugar milling. They are also likely to be involved in oil palm industry. Then I think those would be the commodities sector that you can look at. But also because of the general positioning of the not positioning, because of the general debt level of some companies, you need to measure them, okay, ensure that they do not carry high liabilities, because in a recession economy, having high liabilities, long-term debt and such, then that could be a burden. Hope that answer your question.
Yeah, I think there's one more thing I want to add. Malaysian tech stock, I'm a bit doubtful. So because some of them, I do not know how they really classify that under technology sectors. We must really look at the nature, the fundamental of the business first. That is the most important thing. Yeah.
So I think John have another question. Are tin considered commodities and will be part of commodities bull run? I think yes, tin is part of the commodities, and I think tin actually have a surge in price quite recently. I can't recall for what reason, but I believe that it has something to do with the with some restriction in the selling of tin by one particular country. I do not know for whatever reason, but price of tin actually surged. Okay, so that's my answer. And the next question is that do I own any rice ETF or stocks? I have to confess that I do not own any rice ETF. Okay, and a bulk of my portfolio is heavily invested in junior mining companies, which means exploration companies. And my portfolio has been quite badly hit because no one is interested in exploration companies because they are very small cap, they carry high risk. But most of the small cap companies that I own, I can buy them with low capital, helping me to secure tens of thousands or hundreds of thousands of shares but they already have asset in gold and copper. So I normally look far ahead than most people, simply because I also have my own portfolio of REITs that help me to have a steady income. So I invest quite a lot in REITs in Singapore. Most of my resources portfolio, I think they are into gold, silver, copper, uranium. Okay, these are the few main ones that I actually own. I also own some tech stocks that is in China, mainly because I believe that China has a huge opportunity. I think for those who bought my book, I was saying that in the last chapter that if you have a long-term view, you can look at certain Chinese semiconductor stocks, and one particular company, I think SMIC, which I actually do own, have seen its price risen, I think, from about 13 or 15 Hong Kong dollars last year to about $25 at its peak this year, before falling back down. I think now it's about $23. So that is how I see Chinese tech stocks. My other investment, of course, well, I invest in junior mining companies in Canada, Australia, US, most of them. So uranium companies as well. So the tech stocks that I own are mostly in China. Yeah. So other than that, they are into Singapore REITs. And that paved the way for some steady income. So that's how my portfolio is as it is. Yeah. Okay. So rice ETF, I tried looking for rice ETF, but there's no rice ETF. There are potential for some grains ETF, but you need to, I think I've shared with, I posted in the members area about some Australian ETF on grains. Yeah. So any other questions? There seems to be some flickering. Is it from me or from you?
Maybe from me. I will stop the video.
I think I'll stop mine too, because mine also have some video problem.
Okay, maybe internet connection not stable. That's all.
Yeah. So
Okay.
any other questions before we call it a day? So if there is not, well, thank you everyone for attending. Thank you, Evelyn, for a good sharing session. So hope you all have a nice day. Bye-bye.
Oh, one more message. Do we?
Huh?
Okay.
Okay.
Yeah. Okay. Thank you. Okay. Thank you everyone for attending today's session. We will see you again next month. Bye-bye.
Okay. Bye-bye.